Hey folks, just a quick update for members. So this is not going on YouTube, but I'll put it up in the members area and in the members area on YouTube as well. A couple of things that we've done today. We closed our natural gas short trade at just above $3. You can see that this is obviously a key level. That's the breakout level that we struggled to get through and rejected off a couple of times during this year with a gap down on the first occasion. We've come down, it's that red line there, and we've come back down there. Perhaps better to look on a day chart. We've come back down to that level, just above it, and it's also the midway of this channel. As you can see, there's the channel dotted midway line, and it's also where the 20-day moving average is. So it's a good place to get out of this trade. We got it out at $3 and 3 or 4 cents, depending on what price you were on at the moment of the alert that I sent out. I think I was at 304, and I don't know what's going to happen next. We've got a gap above us, another weekend gap. It's a tiny little gap from last weekend, and we'll see what happens there. We may just bounce up here, try and fill that gap, get to the underside of that spike low once again, and that's at around about $3.22 or 23, and then move down. I still favor the move down into these areas, back into the channel, below the channel center line, below $3, perhaps down to 285, and perhaps even down to 250, 255, 260. So I don't know what's going to happen from here, but I do worry about that gap above us that needs to be filled at some stage. So we'll wait to see what happens with that. Perhaps we'll get that move up, as I said, up to about 325, 320, fill that gap, and then a continued move lower. Or we'll just carry on moving down into these support levels, and then we'll start to look to buy, and look to buy quite seriously, really, somewhere below $2.85 down to $2.50. If we can get that price, that'll be a good place and a good time to load up with a little play to the long side on natural gas. The other thing that we closed out today, well, while I'm on this chart, this is really just going to be a 5-minute update. We're short on WTI. I eventually pulled the trigger short on this at the 20-period moving average. This is WTI Oil, and I'm looking for a move down below these lows and quite a lot lower. In fact, down into about 65, perhaps even below 65, down into the 60s and maybe even 50s. But we're going to have to contend with this trend line that we've broken down beneath. We've got the 50-day moving average just holding us up. We've got the 20-period moving average just pushing us down, and this channel bottom. We went short, but I'm willing to add to that at around about $87.70. That would be the ideal place, touching the underside of this upward sloping trend channel line. If we can do that, then that would be great. But we've added a little piece in here already, short. And if we keep going downwards, we've moved a little bit down. We're about $1 in the money. And if we keep moving down, well, we've got something at least, and we'll have missed out on the bigger chunk, but that's not a problem. Let's focus on the metals, on the trades that we're in at the moment. There are two. There's gold and there's URA, and let's have a look at gold. Uranium is a metal. People keep on saying that they don't believe that, but it is actually a metal, and it's mined pretty close to where gold is mined quite a lot of the time. So we're long on gold right from down at the lows. We actually hedged some, in other words, put some short positions on as we went up through 1900 and then 1930, and I took some of those shorts off on the dip down a little bit earlier on today. I've still got a small hedge position from around about 1900. If we get that back down to there, I'll take that hedge position off. That was a little bit of protection as this rally powered up through that resistance level, which was going to be tough. It could have been tough, but it wasn't. And if you look at this candle that bust up through there, if we go back to the last time we had a big rally at around support and resistance levels, that you can see it's not uncommon for gold to just slice through resistance pretty easily, like it did over here, going back a little bit earlier into March this year. And there was a couple of other occasions, this time over here, where we got these 3 big daily candles moving up, breaking up straight through resistance on both occasions without any hesitation. There's another example there, that candle there just busting up through that previous high. So gold tends to do that when it gets a bit of a wiggle on, just keeps on going. But it's sometimes good to have a little bit of protection in the form of a hedge, which is what I did. But we took one of the hedges off for a little bit of profit actually, and the other one's just sort of in there, but it's a small hedge, about a third of our position. So we've still got 2/3 left. Actually, it's about 75% left now. If we keep on moving up, we've still got a 75% position. If we do dip down to 1900-ish, thereabouts. I can't remember the exact number. I think it was 1902 that I got in, 1902.50. And I'll take that hedge off and let the rest run up as we go along. It's possible, although I think unlikely, that gold is going to dip down, back down, and perhaps even move down below 1900 again, down below 1820, down to the 1800 level. We do have a double bottom here looking back into March. That was this another double bottom there, and this is a very V-shaped recovery off this low. So I think it looks pretty good, pretty solid and pretty strong. Any dips should probably be limited to maybe 1870, 1865, but probably 1885 to 1890, and maybe even just where we got to today, back down to about 1907, and that was today's little dip down before the move up. But it's possible we could get a little bit lower, down to some of these support levels, though I don't think so. This is a very dramatic V-shaped move up. And then uranium, we took a long position on here. It's a small position. I'm looking for this move down before the move up, but I'm not too sure if we'll get it. So we've added a little bit in. We can just edge into this trade as we go. If we do manage to rally up from here, we've got some of it at least. If we don't, we'll be able to add some as we head down towards this level where this path is. And the path takes us all the way up to about $32 and beyond. So that's what we're looking for on URA. So that's a trade we took as well. And we're in that one long, but not the full position, just a small piece. And then stocks, well, here's another thing that we traded today. We traded NASDAQ quite beautifully, and let's see if we can have a look at this. So we got 14,990. Actually, towards the close of play yesterday, 14,990, and we got out at 5,185 today, and that was just a few cents, a few pennies, a few pips, whatever you want to call it, off the top there. So we pretty much closed at the top and we got in right at the bottom. So we got the entire move of today, and I'll just show you how much we got from the bottom. So we got in at 14,990. That's kind of at the close of the play of the day yesterday, and then we got out near the top here. So that's about a 1.5% move, 1.4%. Go away, Pixie. Dog's behind me, my daughter's dog. It's meant to be a Jack Russell. I should show you a picture of it. It's absolutely enormous. It's definitely not Jack Russell. That's the only thing we're in stocks at the moment. We haven't traded any stock names today. I really don't know. Generally, I think I'm still bullish on stocks, and I'd like to see NASDAQ approaching this top channel line. Let's just expand that and see if we can break up through there and potentially move to new all-time highs. However, there are lots of reasons to be bearish on the stock market. There are lots of reasons to be bullish on the stock market. And if you look at positioning in terms of shares and in terms of options, futures positionings, and all the other various ways of trading the stock market, it's pretty much 50-50. Although, in favor of the bulls, the market did slip into almost extreme fear last week. We sort of bounced out of that a little bit. We're back into the sort of fear range. See if I can put that up on the chart for you. Yeah, so here it is. It's on the CNN website if you're interested, and you can track this, and you can also have a look at what sort of measurements go into this. It's really quite interesting, and all the sorts of things, including volatility, safe haven demand, junk bond demand, and a few other things. Put in call options. We were talking about that earlier. As you can see, pretty much equal, actually around about 1-to-1 ratio. And then the stock breadth, price breadth, which is also cool, and stock price strength, market momentum, all of this. And you put all these together in some sort of way, and they come up with a number over at CNN. And we were slipping down towards extreme fear. General rule of thumb is when we get into the extreme fear level, it's time to start to think about buying stocks. When we get into extreme greed, it's time to think about selling stocks. And we got pretty close to extreme fear last week. We've moved back into the fear range, right in the middle, in fact, and a little bit more, and we'll be back to the neutral. On one hand, I think we could go down. If you look at all the economic indicators and everything that's going on, and the geopolitical risks and so on, stock markets should be moving lower, but there are various other reasons for the stock market to be moving higher, including things like the Fed decisions regarding interest rates, and still a bit of cash floating around that people have got to spend. Some of the sectors in various industries are still quite strong, and nothing's really completely broken just yet. And the stock market's inherently optimistic, so as long as nothing's really breaking it, it's likely to head higher. So I don't know. That's where we are at the moment on stocks. So we took that NASDAQ trade, and we're not looking at anything else at the moment. S&P has also moved up a bit today and fallen back down. You can see there's a lot of headwind above us. On S&P, for example, we've got the 50 and the 100-day moving average. And we've got these resistance levels just above us, and we've got this downward channel line. And we're also making lower lows and lower highs on both the NASDAQ and the S&P. But my argument is, well, in order to make bull flags, you have to have lower lows and lower highs, like we've seen here. There's the bull flag, so-called, on S&P. This flagpole's not very erect, let's call it. But on the NASDAQ it is, and we have a decent bear flag here. Really, it's perfect length. It's a decent size. It's not too volatile. It's not too long. It's not too short. And it's at the right angle. We've got a nice flagpole. So generally, yes, we've got lower highs and lower lows, but it could be just forming a bullish flag. I think I said bear flag earlier. I meant bull flag if I said that. And if we can break up through that level, test it get through it, back test it from above, bounce off it, we should be able to see NASDAQ moving above these highs at around about 15,940, and then move up to the previous all-time highs, and that would take us up to above 16,800 or so, and perhaps even higher than that as we go in towards the end of this year and early next year. So I don't know, we'll have to wait and see how that goes, but so far so good. We've taken some good profit on that. We might reload on dips on this, or we might consider buying if this breaks out through the top and back tests it and bounces off the top of this channel from the other side. That would be another good opportunity to buy, but we did make some progress on profit on NASDAQ today. And then in terms of the yen pairs, well, really not a lot to say. The more things don't change and the more things stay the same, there's less to say about them. So euro yen, pound yen, Aussie yen, Swiss yen, CAD yen, trying to move up, then falling back, lots of jiggery, pokery, moves up and down, spikes, wicks. You can see all the wicks on CAD yen, all these spikes on Swiss yen, euro yen just spiked high and came back down again today. Pound yen looking a little stronger, but the pound's strong. So we're looking for the dollar yen to move down. It's at the intervention level. We're just below 150 again. We're still below this rising wedge bottom, and we've still got divergence on the stochastic, on the RSI, on the MACD, and we're running out of upward momentum. And I think any attempt to move above 150, in other words, to get back into this rising wedge, which is a very bearish technical pattern, any attempts to get back into there or above it will be thwarted, I think, by intervention by the Bank of Japan and the Japanese Ministry of Finance. And then going across the major currencies, well, we're long on the pound, and that's doing pretty well. And we're looking for basically the dollar index to come off and for all of these to rally up, for the euro to rally against the dollar, these are all against the dollar, the pound, the dollar yen to move down. As you can see, it's trying to do, forming a wick high on this 4-hour chart, and then the Aussie dollar moving up quite nicely already. Actually, the Aussie's just broken through resistance, which is good news if you're long on this one. We're not currently. So we've just broken up through that sort of local short-term resistance, just broken up on this last 4-hour candle, so that's looking pretty good. And then dollar Swiss is probably a really good bet. We've seen a lot of money moving into the Swiss franc, as it has done into gold, because of it's a safe haven, and people move money into Switzerland when there's danger in the air. And we've got this beautiful channel. This is a 4-hour chart on dollar Swiss, and you can see we're trading in this channel. We're at that bottom channel line. This is now the 4th test, and we're trying to break down through there. It's a support level denoted by the channel line and this green horizontal line which runs across these highs and lows over here. This is a really, really critical level. If we can break down through there, back test it from beneath, and then bounce back down again, this will be an excellent trade on the dollar Swiss franc. And we're now at 0.9, the big round number as well. Not only is it a confluence of all of these things, you'll notice I don't even have moving averages on here. That doesn't matter. We've got this confluence of horizontal support, trend line support, and the big round number at 0.9. So that would be a good trade. We might even get a chance at that today, or perhaps even tomorrow. So that's that, majors, and I think that covers everything. Hope you've enjoyed it. If you have, I'm going to say this anyway. I'm sending this out to members, I think only, but I might just sneak it onto YouTube. So if it does make its way onto YouTube, please give the video a thumbs up and a like, and subscribe to the channel if you want to see more. Take care.